Welcome back to the second part of the video series Top 9 Financial Tasks that should be on the must-do list of every NRI. We are very humbled by your response to our first video of this segment and also to our channel overall. Our fellow NRI community based in USA, Canada, Europe, Middle East, Australia, Southeast Asia have been actively posting their reviews and queries. This is truly motivating and encouraging for us to bring out more such videos. Previously, we had covered the importance of optimizing your bank accounts, the necessity of reviewing your tax compliance, investments, and the importance of comprehensive insurance coverage. Today, we shall continue with the fifth most important financial task. So, stay tuned. I am Chaitanya Garg, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.
Thorough budgeting and expense management are crucial for NRIs visiting India for several reasons. First, cost awareness. Visiting India can involve various expenses including travel, accommodation, transportation, dining, shopping, and leisure activities. Thorough budgeting helps NRIs become aware of these costs upfront, enabling them to plan and allocate funds accordingly to ensure a comfortable and enjoyable trip without overspending. Number 2. Currency conversions. NRIs often deal with multiple currencies due to income earned in their home country and expenses incurred in India. Budgeting helps them manage currency exchange rates effectively, minimizing exchange rate risk and ensuring they have sufficient funds in the desired currency to cover their expenses during their stay in India. Third, optimize spending. By creating a detailed budget, NRIs can prioritize their spending based on their preferences, priorities, and financial goals. This allows them to focus their resources on experiences or activities that matter most to them while avoiding unnecessary or frivolous expense that can quickly add up. Fourth, emergency preparedness. Unexpected expenses or emergencies can arise during a trip to India, such as medical emergencies, travel disruptions, or unforeseen events. By budgeting for contingencies and setting aside funds for emergencies, NRIs can be financially prepared to handle unexpected situations without derailing their travel plans or causing undue stress. Fifth, peace of mind. By having a well-planned budget in place, NRIs can enjoy their time in India with peace of mind, knowing that they have a clear understanding of their financial situation and that they are managing their expenses effectively. This allows them to focus on creating lasting memories and enjoying their travel experience to the fullest. In summary, thorough budgeting and expenses management are necessary for NRIs visiting India to ensure cost awareness, optimize spending, plan for contingencies, maximize their travel experience, and maintain financial discipline and peace of mind throughout their trip. Next is very important, and I should have covered it earlier. Nevertheless, now let's talk about keeping your KYC details up to date. It's a total game changer for managing your finances in India. Here's why it's so important. First, stay compliant. Think of KYC as your passport to hassle-free banking and investing in India. By keeping your KYC info current, you are staying on the right side of the regulations and avoiding any snags that could come your way. Number 2. Smooth banking experience. Ever tried to make a transaction only to find your account is stuck in KYC limbo? Updating your KYC ensures your bank accounts run like a well-oiled machine, making transactions a breeze and giving you quick access to all those handy online banking features. Number 3. Investment confidence. Whether you're dabbling in stocks, mutual funds, or bonds, having updated KYC details is a key. It shows investment platforms you mean business and help you seize opportunities without any unnecessary delays. Number 4. Keep in touch. Make sure your contact info, your phone number, PAN and email are all correct and up to date across your accounts. That way, you will never miss an important update or alert from your bank or investment provider. Number 5. Extra security. Adding a trusted family member's phone number for receiving OTPs adds an extra layer of security to your transactions. It's like having a backup plan in case you need a hand in verifying transactions or accessing your accounts in a pinch. So make sure your KYC details are ship-shape and ready to go. It's all about keeping your finances running smoothly and giving you the peace of mind to enjoy your NRI journey to the fullest. Sixth point on the to-do list is PPF, Public Provident Fund accounts. Time for a closer look at the PPF accounts, a popular saving avenue with a twist for us non-residents. Here's the lowdown. First, term limits. So here's the scoop. NRIs aren't permitted to maintain PPF accounts beyond the initial 15-year term. It's a regulatory thing aimed at aligning with the residency status of account holders. Second, closing time. If you have got a PPF account ticking away, mark your calendar for its expiry at the end of the 15-year period. When that time comes, it's time to bid farewell to your PPF account and close it up. This ensures compliance with the rules and keeps your financial affairs in order. Third, no extensions. Now here's the catch. During your visits to India, you might be tempted to extend the tenure of your PPF account. After all, it's a convenient way to keep your savings growing, right? Well, not quite. As an NRI, it's crucial to resist this temptation. Extending your PPF account beyond the original term isn't allowed for non-residents, so it's better to steer clear of any such request during your India visit. By adhering to these guidelines, you are not only staying on the right side of the regulations, but also ensuring that your financial planning remains aligned with your NRI status. So when the time comes to bid adieu to your PPF account after its 15-year run, do it with confidence, knowing you are making the right move for your financial well-being. Well, now for the 8th task. Let's talk about income tax for NRIs visiting India. This is a very crucial part for managing your finances, especially when you are visiting India. Here's the scoop. First, file your ITR. When it comes to taxes, accuracy is the key, especially when you are an NRI. It's super important to file your income tax returns with your NRI status in mind. This ensures that you are meeting your tax obligations and staying on the right side of the law. Number 2. Smooth financial transition. Filing your ITR isn't just about ticking a box. It's about ensuring a smooth financial transition during your visit to India and afterward. By staying compliant with tax regulations, you are setting yourself up for a hassle-free experience with your finances, whether you are in India or back in your home country. Remember, taxes might not be the most exciting topic, but they are definitely important when it comes to managing your money as an NRI. So take the time to file your ITR accurately. For this, you may like to consult File My Return, who specialize in NRI, HNI, ITR filing, and you will be all set for a hassle-free financial journey during your visit to India. Last but not the least, thorough documentation and record keeping. So, my NRI friends, are you ready to tackle the paperwork side of your visit to India? Here's the lowdown on keeping your financial documents in tip-top shape. First, get sorted. First thing first, gather up all your important financial documents. Think identification proofs, passports, visas, bank statements, tax returns, and investment records. Having everything in one place makes life a whole lot easier. 2. Keep it safe. Now that you have got your documents together, it's time to keep them safe and sound. Consider storing physical copies in a secure location like a locked drawer or a fireproof safe. And for added peace of mind, keep digital backups using encrypted storage or cloud-based solutions. That way, you will always have access to your documents no matter where you are. Third, share the load. Don't forget to update your emergency contacts. Share relevant financial information with trusted family members or advisors. It's all about having a backup plan in place, just in case. Plus, sharing the load can ease your mind knowing that someone's got your back in case of an emergency. So there you have it, your roadmap to staying organized and prepared during your visit to India. With your paperwork in order, you can focus on making the most of your time in the country. Let's recap the must-do list for your trip to India. First one was streamline your banking and accounts to make your money matters a breeze. Next, get savvy with taxes to ensure smooth sailing during your stay. Don't forget to give your investments a checkup and secure comprehensive insurance for peace of mind. Budget smartly to make most of your trip and keep your KYC details up to date for hassle-free transactions. Remember, it's time to bid adieu to PPF accounts after their 15-year run. Stay on top of your income tax filings and keep these important documents organized and secure. With these financial must-do checked off your list, you are all set for an amazing trip in India. So go ahead, explore, experience and make memories that will last a lifetime. Wishing you safe travels. For more such informative videos, don't forget to like, share and subscribe our YouTube channel File My Return. I'm Chetan Nagar, your tax advisor, making finance friendly. Signing off.
FMR Finance Weekly. Simplify your life with our financial advice.